Welcome, I'm Ernie Goss, research faculty member here at California State University, Fresno, in beautiful Fresno, California. Today I'm reporting on our March survey results. Of course, this is the first business day of April, and the national numbers will come out later on this morning, and we'll then compare our four-county metropolitan numbers, which again, we produce a leading economic indicator for the four-county area, and we can compare that to the national again, which comes out later on this morning. But anyway, what did our March survey of businesses in the four-county area tell us? Well, it was a good number, a good month. The overall index was above growth neutral. Again, the index spans from 0 to 100. Anything above 50 is growth positive. It was above growth neutral for the 16th straight month. It was up to 57.2, up significantly from February's 52.9. Now that's a good number. It's a good number for the month of March. And of course, this is just off slightly from November's record high of 59.9. So we're seeing some pretty good readings coming out of the Fresno metropolitan area, what we call the San Joaquin Valley Business Conditions Index. Now here I'm going to show you a graph of the index, and this spans from October the 13th to March of 2015. Again, that's October of 2013 to March of 2015. And there you see the red. In red is the San Joaquin Valley, and you see that spike up there for this month. That's a good signal. Still off of the record high we recorded back in November. But when that number there you see in the blue, that's for the U.S. Now, when that number comes out later on this morning, I expect that number to be a lot weaker than the San Joaquin Valley number. So we're seeing some pretty good numbers coming out of the four-county area, the San Joaquin Valley economic survey, our San Joaquin Valley economic survey for March. And we've been seeing some good numbers. Now, when we ask about the drought, and of course, everybody nationally is concerned about what we're seeing here in California in terms of the drought. We asked the businesses how had the drought affected your businesses thus far, and only 7% said much of a negative impact. Now that's much lower than I expected. But then when we ask them about, well, look ahead to 2015, if this drought continues, how many of the businesses then expect negative impacts? And then it bounced up to almost 80%, 79%. That's quite a big jump. So we are likely to see some significantly more negative impacts from the drought than we have seen. Now, understand that we don't really survey many agricultural establishments, mostly those connected to agriculture and those that are not even linked to agriculture. So we'd expect to see not quite what you might see in your own, what you're observing if you live in this San Joaquin Valley, and if you live in the rest of California, and if you're seeing it from outside of California and the rest of the nation. Now the inflation gauge was down to 47.0 from 47.9. Of course, that's below growth neutral, but I'll call that disinflation rather than deflation, meaning the inflation numbers coming down, still not negative. Even though the number's below growth neutral, I still got to see it there a lot more than just a couple of months. A couple of months does not a year make. New export orders, boy, those are strong. I can't explain it. The value of the dollar is up significantly. Should be bringing down exports. Not seeing that. We've got a record number of non-farm workers. Now that's non-farm. Now on this farm side of the San Joaquin Valley, the four-county metropolitan area, we are seeing, of course, some losses in farm jobs. And of course, we can link that back to what's going on in terms of weather and the drought. Now, the sectors that are strong, construction, gaining back those jobs. Still not back there yet, though. Manufacturing, even seeing some glimmers of job growth there even. And then we got, especially on the non-durable side, that would be food processing. Then you're looking at other sectors such as business services, like engineering, for example. That's a good sector to be growing in. The San Joaquin Valley is growing in that area. Now, on the flip side, the negative side, unemployment rate still 12 up and down, a little above, a little below 12%. Of course, that's more than double the national average. That's a lot to do with workers still out of jobs for long lengths of time. That's a real troubling signal for the area. But in terms of jobs, we're adding jobs. Now, what to watch for next month between now, this is the first business day of the month, and the next time we meet, which will be the first business day of May. What's that jobs report which comes out Friday? That's April the 3rd. Very important jobs report. Look for the number of jobs, which I think is going to be above 200,000. That's important, but not as important as the wage number. Look at the wage number in there, how much wages are growing by. When that number begins to break consistently above 2%, 2.5%, and then 3%, you're going to see a rate hike by the Federal Reserve. Now, right now, most economists are expecting a June or July rate hike. That's probably going to see it. It's going to be a small rate hike, so don't be too concerned about it. CPI, look out for, what's that one? The BLS releases that April the 17th. When that number is breaking above 1.8%, that's either annualized or year over year. That's a concern if it gets above that. In the sense that it'll be a rate hike, and maybe rate hikes a little quicker than we expect. I don't expect it to be, though. I think we're still going to see inflation moving along at not such a good clip, or good clip if you're wanting low inflation. Now, if you want to see higher inflation, you're probably not going to see it. Q1 GDP number coming out April the 29th. That's a backward-looking number. That's Q1 for this year. That's not going to be good. This economy, this U.S. economy, is limping along. Thank goodness our San Joaquin Valley economy is not limping along, except on the unemployment side. There it is. And except on farm jobs. There it is. Now, what are the risk factors going forward that you need to keep an eye on? I think long-term interest rates. Now, I haven't said that in a while. It's been a few years, actually, since I've said that. Long-term interest rates, if those begin ticking up. Now, what would cause them to tick up? Inflation, although I don't expect that. Then what also could push it upward is disinvestment in the U.S. economy. That would be foreigners taking their money out of the U.S. and putting it somewhere else. Where would they put it? Maybe Europe, believe it or not. It's settling down in Europe. That would be a signal. And finally, of course, we would see it if risk got reduced. That would be global risk. For example, Russia in Ukraine. Now that would be a big risk, bump up, and that would reduce those long-term rates. But anyway, watch for those long-term rates tipping higher. And finally, oil on the move. Keep an eye on the oil. Oil prices probably going to come down. And of course you say, well, that's good. It is good, except on the investment side. It is good on the consumption side, giving us more money to spend as consumers, but business investment comes down. That's particularly not much of a case, not so much for California, but some of our neighbors in North Dakota, our neighbors in Texas, our neighbors in Oklahoma. You could see some problems there if oil prices continue to come down. Of course, for alternative energy in California, with prices coming down, that puts some negative pressure on alternative energy in California. So that's it, folks. That was our March survey of business in the four-county metropolitan area of the San Joaquin Valley. I thank you very much. I'm Ernie Goss, research faculty member here at California State University, Fresno, and I thank you for joining us today. And between now and our report on the first business day of May, may your economic cup runneth over.